Yeah. Hi. Good afternoon, everyone. So I'm Paula Naoufal, and I'm going to be moderating the last session of the day. I know it's been quite a long day and fewer audience, but this session is of utmost importance given the regional changes that are happening. So what we noticed from this event today that inflows into the GCC are stronger than ever, investments, foreign direct investments as well. So today we're going to be discussing VCs in the GCC region, comparing them to VCs elsewhere. I'd like to welcome my panelists, Yitz, General Partner at Mizmaa Venture, Romain, Partner at Antler, and Michael, Partner at Golden Gate Ventures. If we could have a round of applause for the panelists. Yitz, I'd like to start by asking you, VCs in the GCC, how do they compare to the rest of the world? Specifically, let's speak about Europe and North America.
They have a very long way to go. I'd start that way. I think the VCs here are very hungry, which is absolutely outstanding because part of what you need is that hunger. They're very, very resourceful because even though there's a lot of capital in the region, most of the other components that you need to be a great VC are missing. I think are missing, and they also have a vision for what they want to look like in 3 to 5 years.
What's missing?
Well, my biggest horse around this is mentorship, and I'll keep coming back to that. But to me, if you're going to be successful as a physician, then you go to medical school. And the only way to be successful as a VC or as an entrepreneur is to learn from people who've actually done it before. And some of the countries in the region are spending more time on mentorship and bringing people to work with entrepreneurs and VCs because it's not only the entrepreneurs who need help, but actually the VCs who can use lots of guidance and mentorship. And that's going to be where the greatest lack here and where the greatest strength will come in the future.
Michael, do you agree? Do you think they still have a long way to go?
Yeah, I think on the added value side, there's definitely some growth. There's one thing that I would say is the VCs here have an advantage, which is they have looked at other ecosystems over the past decade. So as an example, they could have looked at US, Europe, Asia, but even India in terms of what VCs look like, how do they grow, how do they scale their teams, what kind of quality do I need to have in my team to actually run a VC. But there's one slight difference here to VCs in other markets. I've seen more single LP VCs here than I've seen in other markets, and they tend to act a little bit differently in terms of the way they look at adding value, the way they look at building their team, and the way they look at building their thesis. So yes, true, there is a long way to go, but the good thing is there are a few amazing examples that they can example themselves to globally.
Roman, do you agree with the gentleman?
Yes. But I think I would almost zoom out and say, what is the role of VC here versus in the rest of the world? Right? And I tend to agree with you, Michael, which is, you have a lot of emerging fund manager, but here it's much more paving the way to what's going to happen in the next 10 years, meaning that you have people who have not necessarily have done it before, who got a lot of constraints on the way that they do what they do. They're building an ecosystem which is often pushed by the types of LPs that we have in the region. So it's a beyond the financial performance conversation, which is also probably something which is a bit unique, in particular when you compare that with Europe and North America. And the share of VC in GDP here is just like a quarter of what you have in the rest of the world. So I think fully agree on this is the beginning. I think there is a unique context here, which is also explaining a lot on how VC operate, and definitely need the guidance along the way. Yeah.
I think the risk, something that what we'd have to think about is the risk profile here. Because in my business, first we put the money and then we worry about it afterwards, if you're investing globally. Here, even the VCs are very cautious because the capital is cautious, because their parents are cautious. There's a lot of family money involved. And I don't know that they've crossed the chasm yet to understand that this is a crazy business that they're in.
I'll probably tend to say probably they have not crossed that yet. And I would even push that, right? I think, I mean, we're in a region where senior leadership is actually very pushy and ambitious. The level of that ambition shall be cascaded into how VC operate, but you have an embedded risk aversion. So we did a bunch of research in Saudi in particular, and when you ask people, do they want to be founder? I think it's 75% say, yes, I want to be founder. And then you say, how would you feel if you actually fail in the next 12 months? It's awful. VC is about failing, and it's okay to say that. Out of 100 portfolio company, you're not expecting to have 100 unicorns. Otherwise, your level of risk...
I do.
The level of risk that you're taking is maybe not high enough. So as an asset class, there might be a bit of education to LPs, to other VCs sometimes, to founders as well. And the perception of risk is definitely something which is worth pushing.
Michael, so amid global market contractions, there are a lot of opportunities in the GCC. We saw the event today speak about that. We heard from different ministers. I myself moderated a panel with the Minister of Economy. We spoke about opportunities. So do you believe that the GCC has a big opportunity given the current global market situation for VCs?
I would say yes, but yes with a caution. If you go back a few years, we all know that a lot of VCs globally came to the region with one thing in mind, mainly fundraising and around capital formation, either for the portfolio or for their flagship funds. That has led to more VCs being here on the ground and spending time here. So I think that's been a good part because they had exposure to the region. But the reason why I say caution, if I travel globally, whether it's Asia, US or Europe, you still see or hear a bit of misconception about the region. There's still this thinking behind, I'll come here, I'll raise capital, I'll go back to my home market, invest that capital and never come back.
But sorry, do you think this is still the case? Because also part of the discussion today was how the GCC countries are working on incentives to keep investors, whether it's through golden visas, permanent residencies. So do you think the steps that are being done by the governments here are incentivizing people to come and stay and keep the capital in here, or have you not seen it shift over time?
Well, I moved and my kids are in the region as well, so I would say it works. I'm an example of it actually working. No, it's definitely very important, but I do feel that there are two ways of looking at it. One way is, if you look at the managers that have said, before any incentives and before any investment, I'm going to set up shop here. I'm going to invest my own capital, my own time, my own attention to actually build a presence here, versus I want to raise money first, and with the money I raise, I'll then consider opening up an office here and spending time here. I think that's a big difference in terms of perception and how you look at the region. But to our earlier discussion, I would say that, yes, I would say globally there's a lot of attention in terms of expanding here to the region, and those incentives have definitely helped. And now that we're seeing, again, more funds, more PE funds, more investment bankers actually setting up shop here, I think there has to be a balance in between purely on capital formation and actually, to our earlier discussion, helping to build the ecosystem and spending time here and fostering the ecosystem as well.
Yet, so I wanted to ask you the same thing. Do you think that the incentives here are enough or on the way to becoming enough, and the GCC can benefit from the opportunity of the global market contractions to attract more VCs to come?
So I think there are a couple of answers. First of all, I look at this region as most probably the only growth region in the whole world. For me, it's not China, it's not Russia and Europe. It hasn't been for a very long time. Let's see what happens with the election next week, and I can tell you if there's going to be growth or recession, depression later next week. But so there's two components. One component is people coming from the outside to raise capital here, and this being a place to come and sell your wares. Clearly, this is where the growth is. But in our business, I'd actually like to take it from the other side and say, can you make money here? Because if you're in the venture capital business and you come here, and I've got a fund here in Saudi as well. We have 9 companies in our portfolio. Some of it's my money, actually, and the rest was government money. And what we're finding is that there is so much government money, at least in Saudi, that prices have gone up, right? And so you have not enough deal flow, too much capital, too many VCs, and the prices go up. So there's got to be some sort of balance where we're going to need to find more companies, create more companies, which goes back, I think, to our first conversation. How do you bring talent? How do you bring people from the outside? How do you bring people from the inside to help create new companies here? Most of the money that I've actually made in venture capital has been in builds. How do you come up with an idea, find the founders, put in the seed money like you guys do, help them build, help them grow, and get to the next level? So I actually think that there's a huge amount of capital in the ecosystem in the region, obviously more weighted to Saudi than Bahrain, that there are more opportunities than people imagine here, and that you can make money. But we need more B-level investors and C-level investors, Series B and C, because there's tons of early-stage capital, but if you don't get the up rounds later on. So there's structural issues, but for the most part, I think they're really doing it right here.
Where do you place the UAE?
Well, definitely in between Bahrain and Saudi, that's for sure. I find it particularly easy doing business in the Emirates. They're much more used to the kinds of things that we talk about. They're further ahead, but it's size versus and Saudi's obviously the 800-pound gorilla.
Romain, to you, do you think there's opportunities here?
I think I'm in the best region in the world at the best time. Otherwise, I would do something different for sure. So I feel privileged. Now, on what you said, I agree with the vast majority. I would nuance a few things. One is on capital, where, and you're right, there's a balance of capital somehow. The access to that abundance of capital is not that easy. And I think there's 2 or 3 big sources. One is sovereign, which is concentrated, very large, which takes time, and which comes with a lot of constraint in terms of where do you spend money. And that is extremely helpful to make sure that we localize what we do. It obviously needs to be managed in a careful manner in the long run to make sure that you don't trade off financial performance, which could have a negative impact to have a fund 2, fund 3, and later on. That is very, very important. The second thing that you mentioned, which I agree with, was, well, you need to make sure that you have money all along the journey from idea up to IPO. And that requires 2 things. One is get clarity on the path to exit somehow, and everyone is working on that at the moment at the government level. Number 2 is that you need to have sufficient level of money all across the journey. And you mentioned there is money at the early stage. I might argue there is not enough money at the early stage, in particular at the beginning of the journey. At the pre-seed level, it is not exactly that common. And we do a first check to, we've done 22 first checks in the past 10 months. And what we try to do is institutionalize the angel round. And angels in the region sometimes might benefit from changing a bit the mindset and making sure that I'm not taking 50% of your business for $100,000, which kills every single VC podcast, right? So I would say on capital, I fully agree with few nuance, and you might want now to see much more private money goes to VC, and in particular family-owned businesses in the region. And the second, on the stages where you have money, I would argue that you need much more infusion of money at the beginning, where the risk is higher, but the payout is much higher as well, and will fuel the full pipeline for the next generation.
I think the VCs in the region that can figure out how to raise capital not from the sovereign wealth funds, they're the ones that are going to be very successful, because there's a lot of LPs bring a lot of value to the table, in particular in a place like Saudi, but in the Emirates and Bahrain, the banks, the construction companies, anyone that has capital and they know how to use that capital correctly in our world, I think will be very successful. But that has not shaken loose as far as I can tell, unless they're giving it to their kids and their grandkids, which is a great thing, but I wasn't born into that family, unfortunately, so we don't benefit from that.
But don't you think that sovereign wealth funds make it less risky and safer?
No, if anything, their rules and regulations make it more difficult. It has the opposite effect. The more, in venture capital, the more rules and regulations you have, the odds are you're going to fail more than you're going to succeed. That's in our business, I think.
Yeah, the one thing I wanted to add is if you speak about balance, to Yit's point, indeed, if you look at the sovereigns, they tend to, of course, have an economic development standpoint with their capital. So if you raise from a sovereign, they tend to look at, okay, do it as a one-for-one. You raise $10 from our sovereign or 20, that 20 goes into our country, so you'll have $20 million of deals in whichever market that you operate or the sovereign operates in. What we've learned in raising our first MENA fund and speaking to families, the families basically said, we just need you to invest in the best deals. And if that best deal happens to be in Bahrain, that's fine with us. If it happens to be in Saudi, that's fine with us as well. So for the families that have had less exposure to venture historically, they're very keen on investing in this asset class. What their issue has been is manager selection, where sovereigns have a lot of data points because they've been investing in venture for decades. They have a lot of data points on which managers to invest in, which managers do they like, what type of managers do they like. For families, this is oftentimes very, very new. So I think there is an opportunity for sovereigns actually to share some of that data points with the families in the region for their manager selection, because I think the family capital can substantially help across the technology, across the capital stack for VC managers.
Michael, I also wanted to ask you, so obviously VCs want to make money. One of the most common one is through having the startup exit. So in 2023, I believe it was the highest number of IPOs in the GCC region, and year by year it's increasing. And a lot of the companies that are going towards IPO are kind of government-backed. So don't you think that also incentivizes VCs and startups here in the region seeing potentially more IPOs here?
We've been, as a firm, we've been studying IPOs for the past decade, working closely with stock exchanges across Singapore and the US. I cannot stress enough how important exits are, not just for us as managers, but just for the ecosystem as a whole. The money tends to flow back into the ecosystem, whether it is the founders become angel investors, the managers are able to raise new funds because they can show DPI. What I do think is very important is we oftentimes see IPOs as an amazing one-time milestone and everyone walks away very happily. 9 times out of 10, that's not the case. There's lockups, that there needs to be liquidity after the IPO event. Oftentimes, VCs are underwater after the IPO happens. So I think it's of course, an important catalyst, and governments are very, very helpful. But it also means you need to have liquidity in these markets, and these exchanges need to be very liquid.
But we've also seen like these IPOs, specifically in the UAE, being oversubscribed also.
Yeah, which is actually amazing, and that's fairly unique, which I have not seen in markets like Asia, for example. Well, in China, yes, but not so much in for instance, Singapore, Indonesia. Here, I would say the retail market is relatively more active in terms of buying these stock exchanges or buying the companies on the stock exchanges.
I think you need to take a look at the statistics. How many of those companies are venture-backed companies in technology, and the numbers will be infinitesimal. Most of these are much larger companies, older industries, and even if they're newer industries, check to see, look at what we call the cap table, who put the money in, and I'd say maybe 3 or 4 or 5 a year in the region so far have been venture-backed. And if you want that ecosystem to grow, to your point, it's got to be venture-backed because you go right back in the system.
So you don't think it would incentivize startups and VCs, just seeing, even if they're not backed by VCs?
It definitely incentivizes because active markets and robust markets are a good thing, but we need more of them in our space.
Romain, what do you think?
Yeah, I just wanted to make sure that you convey. This is extremely important because it sends signal to VCs, to LPs, to founders. It can cascade even if this is tricky, but it needs to happen much more. And I think this is still very early IPO days for the region.
And I also wanted to ask you, what sectors do you see the most lucrative? I've personally seen a lot on AI, tech everywhere in the GCC. Do you think that's the most lucrative sector, Romain?
So as
for the
Antler,
startups.
yeah. As Antler, we were sector agnostic. We were so early in the game. We do first check up to Series C. That we much rather team and founders focused than have a strong conviction on one specific sector. Having said that, if I look at the portfolio that we have in the region, it's heavy on fintech, on prop tech, on health tech, on biotech, and logistics as well. So there are things that we believe, obviously, are fundamental shifts that the region will probably benefit to founders as well. But as a firm, we're sector agnostic.
You need to look at a couple of criteria. And I would say the first criteria is what's the local market? Because we're strong in saying that if you're in Saudi or in the Emirates or Bahrain, first build for your local market and then build for the regional market. And then, of course, you want to go global if you want to be a big company. So that's one thing. Second thing is you need talent. You know, you look at all the money going into AI in the region, and now go try and start an AI company, right? And I think the region is exploding in the opportunities in AI, but it may be a little early, or there may be too much capital chasing. And what you're seeing is all these big hyper funds, the 100 billion, the 50 billion. It's all going outside. It's not internal because there isn't enough of a market just yet. So we're very focused. We're agnostic, but we're in the same exact space as you are for the same reasons you are. There's local markets. People understand the market. They're traditional industries, and there's a lot of either Me Too's, which is plenty good, so you can do a construction tech company that the United States is $1 billion company, but they haven't come here to the region. Why not start? You know, it's kind of like the rocket internet days. You know, in Germany in 2010 or 12 or 15, there's no reason not to do that. And then there's, of course, the whole white sheet approach where there is no one doing a certain type of e-commerce logistics. I'm the chairman of a company in Saudi Arabia that's the first genome sequencing company in the kingdom, right? So we're just focused on churning out genome sequencing in the kingdom. I don't think we'll ever be a big world player, but we can be big enough in the region to go public. So you got to look local, then a little more local, then hyper local, then bigger. And where's the talent? Those would be my two criteria.
But also, if you see companies like OpenAI, they're always in the UAE. Tech giants also coming to the UAE, for example, in Saudi Arabia. Don't you think that shows confidence in the tech and the AI sector and the digital infrastructure? Because the UAE and Saudi Arabia are attempting to be global leaders, not only regional leaders when it comes to artificial intelligence and technology?
Unequivocally, that's correct. Unequivocally, that's correct. And, the saying in Saudi is the new oil is data. And I think that the whole region will get there in time. And as much money as you throw at the problem, it's not going to, 9 months, I don't know how it goes. We know the saying. So it's going to happen in time. But obviously all the capital that's coming in, all the outside capital will help to grease that ecosystem much better than if you didn't have the capital.
Before I follow up with you on talent, Michael, I'd like to ask you the same question. Which sectors do you see the most lucrative here?
We tend to look at sectors that are, or look at problems that are harder to solve. The danger, and we've been doing this for 14 years, the danger is that we all the three of us invest in the same payment gateways. All three of us invest in the same e-commerce companies, and there's nothing wrong with these companies, but what happens is because we all focus on these same sectors, that specific sector kind of inflates. And then, eventually where are the exits? Because how many payment gateways would you need, or et cetera. So we tend to look for problems that are a bit harder to solve, for instance, within the medtech or the biotech space. But look at some of the amazing sectors that are in the region. Look at manufacturing, look at oil and gas. What does innovation do within those sectors? So without slapping AI on everything, we'd rather look at, let's take traditional industries and how can they innovate to make those industries bigger or tap into new markets. Then I think the second thing specifically for the region here, after investing in Southeast Asia for a very long time, Southeast Asian companies tend to build for Southeast Asia. A company in Indonesia tends to build for Indonesia. What we're seeing more and more is companies, for instance, in Singapore or Vietnam that are looking at a global market. I really think that the Gulf is ideally positioned to build more global companies than we've ever seen before.
In any specific sector?
It sounds very boring. We're agnostic as well, so apologies for that. But we do spend a lot of time on medtech. innovation in oil and gas, and innovation in manufacturing. So you can think of robotics.
Innovation and oil and gas. So the region is also attempting to diversify its energy sources while also maintaining economic growth. So innovation in oil and gas, are we talking carbon capturing technologies, for example?
Yeah, but even if you just look at the plants and how can you make those more efficient. So we look at SaaS systems out of the US that are expanding here, that have very smart technology in how do you actually run an oil plant and reimagine that. That's also what we look at.
If you look at the Middle East Green Initiative, predominantly I think out of Saudi, but for the whole region, it's a huge opportunity for startups. The problem is that the rest of the world hasn't quite figured out what technology is going to make money in that space. But if you're going to come, I would come here to do that.
And there's a debate also about how to transition and what technologies to use.
Right.
So all three of you spoke about talent and the importance of maintaining or bringing talent to these VCs. Yet, I'd like to start with you on this point. What sort of talent do you believe is necessary, or what sort of team do you believe is necessary to have a successful VC in the GCC region?
The VC or the entrepreneur? If it's the VC, the best VC is someone who was born a VC. But of course, no one was actually, not except for my friend here, no one was actually born with a VC spoon in their mouth. And so you have to learn somewhere. I came up the entrepreneurial route, sold my company, and then was very fortunate to go and be a partner at a group called Lightspeed Venture Partners, which is today a world-renowned venture firm. So I learned from other venture capitalists. I think the way we're going to solve that here is that you look at the capital, sovereign wealth funds, and the government money that are trying to attract US and European and Singaporean VCs. When Michael comes here, it's the best thing in the world for the region because he's built it, he's done it, he's created it. When Antler comes here, and they've done it all over the world, that's how you're going to learn. And so you need to bring people to the region. I'm here 50% of my time. And so that's one of the great ways to do it. Talent on the company side, I'm going to let these guys, because they're much closer to the ground on working. But at the VC level, it's being done as we speak.
Romain.
Maybe if you think on talent on the founder side. One is that we've seen now for a few years the emergence of those local mafias, of the Karims and Kitopi and Mosen and Kalosu and Charles. So we've had now people who have seen it and done that at the early stage. Second is it's not just purely local talent. We also see an influx of global talent. I mean, we run residencies in Saudi and UAE, during which we work with founders. We got, for the residency that we have at the moment, 8,000 people applying from all over the world. And today you have 80 founders at Garage in Riyadh, coming from 27 countries. So the ability of the region to bring now a diverse set of talent is just phenomenal. I've been here for 10 years. Back in the day, it was extremely complex to bring someone from any other region, right? And now you go to FI last week, where we went, and you basically have the full welcome into the region. So local talent, we've seen that. And being through the hard work. Second is global people who are coming. And in the global bucket, you have people who know the region well, a lot of people coming from the diaspora who actually have been working for a decade in North America or Europe that you mentioned earlier, and now come back to build for the region, from the region. And a lot of people, in particular in AI, that we see relocating here.
Don't you think that goes back to the same idea that, for example, governments are, in the GCC, they're making the quality of life better, so we've seen a lot of hedge funds move into the GCC, a lot of private equity firms, so we've seen this influx. Ray Dalio opened a family office in Abu Dhabi not long ago. So do you think these, again, incentives and these quality of life and government policies are helping the talents come and reside here, which makes it hence easier for the VCs and the entrepreneurs?
So, for sure. I mean, if you think about what governments have done for talent, I mean, the question depends on the type of talent. And then you have I need to bring top-notch people from my existing startup. And you have a series of incentives in the region of people who say, well, if you're a top-notch tech people, you come and I'm going to cover a part of your salary, right? And then you have another part, which is make sure that your visa is as fast as possible, and the gift visa and the premium residency in Saudi, golden visa, etc., which helps a lot, right? Then you could argue that that could be pushed a bit, like in Singapore, for instance, when you have a series of visa that says, if I'm an aspiring founder, and if you have a VC-backed check, for instance, I can come for a year, test the market, sniff it, and stay around, even if, you know, I don't have a business yet. So a lot of incentives are made for bringing top-notch skilled people already, even more pushed on the visa. But you also have a lot of efforts that are much longer term on the education space, for instance. I mean, you have some campus in Saudi and CAST, for instance, that now open up in China and make sure that you have an influx of exchanges between students. So it's much earlier.
Michael.
Yeah, so again, I'm an example of someone who moved recently. So I can vouch for the fact that having the process being very efficient and very simple and very transparent is extremely helpful. Like, people move their families over to this region, and you want to make that as easy as possible. Maybe as a different take, in terms of getting people here, I think it is the best time at this moment. There's a lot of global talent that is moving to the region, but now we got to think about how do we keep them here for the longer term. It's kind of like dating. You know, the first nights or the first few evenings are amazing, but then you guys are getting married, and then, you know, the fatigue sits in. I've been married for 20 years. I can
married for 40 years. Fatigue is really set in.
So the question about you know, deep capital pools, like if I'm a founder and I raise my pre-seed or seed round, that's amazing. But if there's no view on a Series B or a Series C round, that becomes difficult, right? Or there's no growth capital for my company. You know, how can I build my company here? So I do think bringing talent here is amazing, but let's think about how do we keep them here longer term, and what do these founders need to stay here. Maybe the second point I want to make is in terms of technical talent. I do see a very big gap there still. For the companies that we are investing in and that we are speaking with, one of the biggest concerns for founders is technical talent at the C level. So you can think of CTOs, senior developers, senior engineers, but then also kind of building your development team on the ground. A lot is still outsourced, nothing wrong with outsourcing, but at some point you want to have this knowledge in the country and also within your company, as opposed to outsourcing it. And I think that is still a challenge for some of the founders here.
Think about it. How long has this region been doing tech in a real way? 3 years, 4 years, 5, and I'm exaggerating, right? That people have really looked to the region for tech. Imagine how far the region has come in 5 years. Other ecosystems have taken 50 years. Even Silicon Valley took 20, 30 years. So this place is on steroids. And, you know, you're asking great questions, and each one of these holes need to be plugged, but they're being plugged, and the government plays an outsized influence and role in plugging all the holes and making this a better ecosystem at every turn of the screw.
I remember also reading that there are $3 trillion worth of locked funds for private equities, mainly because of the global economic shifts and interest rates were very high. Do you think yet, now that interest rates are starting to get lower, that potentially there's going to be more investments, specifically in the region? As you know, like most of the currencies here are pegged to the US dollar.
Predominantly, that money that's locked up is private equity money, and our business is much more in the venture capital. But look at the people who are coming here. General Atlantic is in the region. You know, there are, I don't know, $100 billion, $200 billion fund. Some of the bigger established companies are coming here because they see the ability to raise larger sums of money and to bring their expertise. So I don't know if it's tied to interest rates, but definitely as the economy loosens up, as there are more seed deals that come into the ecosystem, the later stage players are going to want to come in with the bigger checks. And it also means when you have Jahez, who had a huge IPO, and some of the other big IPOs, there's a company called, to your point before, there's a company called Mobileye, a Tel Aviv-based company that went public at $25 billion. The day they went public, 600 people left and started new companies, right? And you look at Jahez, you look at Kareem, that's actually what's starting to happen. And now you have something, the most important phenomenon in the world, which is second-time entrepreneurs, worth 10x more than first-time entrepreneurs. And then you have the capital from outside coming in, and they're partnering with local VCs. And so all of a sudden we get this blessing of have General Catalyst come in, Sequoia come in, but look to the folks on the ground here, do the early stage, and unlock the larger capital. So no question, there's more smart money coming into the region.
Romain, what do you think?
So I like the sweet spot that you have described into second-time founders, been there, done that, local partner, and definitely being on a thriving setup now, which is probably a path to success. So I agree, at least on the VC side. On the PE, I agree, it probably might be a bit less relevant on that, but I mean, there are moves to the region that now will become very obvious. General Atlantic is one of them, but you have a few PE shops now, and one of them that has been set up by the former chief investment officer of Savola, which is very interesting, that I would look at, right? So it's still very nascent. Also, have been coming with some baggage in the region with the past 10 years. But yeah, probably interesting to look at, and would help us in the long run.
Michael, so corporate venture arms, how do you see them play in the regional VC ecosystem?
We've seen them as very active. If you look at, for instance, the telcos across the region, they're very active either with their own CVC, doing direct investments, some of them doing fund investments. To me, it feels very, very similar to Southeast Asia, Singapore, Indonesia, Malaysia, where you see the telcos, the banks. I think Doha Bank had an initiative with a startup called Neum from Singapore. They announced it last week. So the corporates are very, very active on the startup side, which is, again, for us as a fund, extremely helpful to see. One of the things I wanted to tag on from the previous conversation, in Singapore at some point, this was around 2015 to 2018, we had a large influx of foreign funds, either at the Series B and upstage, and some of them early stage as well. And I remember how important it was for the ecosystem. And the reason they showed up was not so much, oh, I'm going to fundraise from Asia, but it was the quality of deal flow. And that's the one thing I'm super excited about here is the moment we'll see more Series B deals, Series C deals of high quality, we'll see those international funds coming as well. But I think that the corporates can play a very important role in that added value capital that we spoke about earlier. If you are a fintech company, or if you are building a neobank, or if you are building a B2B payment gateway, collaborating with the bank, and if the banks are open to it, it changes your business almost overnight. But for what I've seen so far, there's been a lot of receptiveness. That being said, some of the corporates are still learning on how to deal with these young founders that are crazy and running all over the place. But I see a lot of receptiveness from the corporates to work with early stage founders.
It's what do you think about corporate venture arms?
I agree with you. I agree that corporate venture is absolutely the way to go. And my background when I sold my company to Bank of America was to start a corporate venture capital group at Bank of America. And today in the US, they've absolutely taken over the industry practically. I haven't found that many here. Obviously, STC is by far and a long shot the most important one, and they put a lot of money to work. But in general, if you look at the big banks in the region, the big construction companies, I've had a difficult time shaking money loose from them and understanding how important these startups are. And I think that the region will change significantly because most of these companies are owned by families or by the government. So I like kind of walking around the PIF hallways, not asking for money, but saying, okay, show me your companies, Roshan and all these great companies, Site, and let us go in there with our young entrepreneurs and figure out how to work with you. So I think the potential is there, but I myself have not had a lot of success in either finding pockets of money, which is not as important as finding, of course, the partnerships. My experience. So who are you going to go with here, buddy? This is the moment of truth, okay?
Maybe that's the moment of truth. Maybe a few things, right? So one is, I've seen the topic of innovation being extremely seriously taken by senior leadership at large companies, whether public or private. How they operated that execution is extremely different from one country to another, and actually public or private. I've seen in the private world and I'm actually going to name them because I think they're absolutely amazing. But you have a group in Saudi, in Jeddah, called The Bag, which is extremely sophisticated, and literally are doing the in-house VC absolutely fantastically, right? I've seen much more public group saying, well, I want to be closer to innovation. Let me think about how do I do that. When I first go into saying, let me scout some founders to be in my employees, and I'll build something and give them 2% of equity and assume it's going to be big, right? That typically doesn't work well. The next type of initiative I've seen, and people who say, well, let me partner with startup, and I have a problem statement. Let me bring 10 startups and solve that. It highly depends on the group, in short, right? And the third one has been people who say, well, I believe that you will disrupt my sector, and I'm happy to give money and additional support and resources, which I've not seen a lot, but I've seen a few in UAE in particular that I believe worked actually well. So you literally have a spectrum of options in the region, I think. I've not seen one bullet.
So we're almost out of time. So if each one of you can give me in 1 minute, where do you see this region in the next 5 years in the VC ecosystem? Michael, I'll start with you.
Well, I'm hoping for more big sports events because I'm a big sports fan. So it's good to be here.
Saudi's working on that.
Yeah, it's good. But I'd say in general, I'm very excited about seeing more companies on the deep tech side becoming more global. I think that is one thing that we are one of the reasons that we're here that we're excited about. We're seeing more openness from founders from the US, Europe, and Asia to be here, to spend time here, to expand their business. It doesn't necessarily mean they're going to move their entire business or build their headquarters, but at least they're present here. And whether they are using it as a gateway to move into Africa, to spend time in Europe, or build a business here, I think that is exciting. I cannot mention the name, but there's a company out of Singapore who did a roadshow with us in March of this year, and the founder's been coming back. This is now his 6th trip, I think, and he's been across the region, speaking from corporates to government, to families, to funds, and it's exciting to see a very young founder that has never spent time here until March of this year, coming back 6 or 7 times and having these conversations. And I think that inspires us, and hopefully the next 5 years we'll see more of that.
Romain.
So one is, I think we're going to 10x the number of founders. I think people got much more excited about what does that mean to build a venture. I think you'll have a very nice sweet spot where more and more companies are growing and spinning off. Founders want to build something on their own, combined with people from outside wanting to build literally from the region, for the region. So I expect a lot more founders. Second is, I expect also a lot more international players coming to the region for multiple reasons. One is being pulled and another one being pushed to come. And I think that that's going to help us tremendously to make sure that it's not just an influx of capital, but also best practices and learning that will make the overall ecosystem better and more thriving, actually. So I'm betting on 10x founders and much more international players in the next 5 years.
Yes.
I wish I were younger. That's the only thing that I can say. If you think about MENA, is 1.5 billion people. And if you think of the gateway from this region is out to Africa and all the Arab worlds, and you look at what's going on, from the whole ecosystem here across the region, this is where all the action is. This is the powerhouse for the next 5, 10, 15, 20 years, and the capital will be allocated more correctly sooner, and the ecosystem that you guys have described is coming. There's no question about it. And you bring in a little sprinkle of, some of the bigger VCs from outside who know how to build ecosystems, and look at Berlin, and just look at other places in the world. This will be bigger than all of those, maybe including Silicon Valley, maybe not. But in that milieu, that's what I think is going to happen here over the next 5, 10 years.
Thank you so much, everyone. Thank you for my speakers, and thank you for the audience as well for listening to this conversation.
Thank you.